There is no better setup than this strategy, and it forms every single day. You can quit your job in 90 days and become profitable from this one strategy alone. These aren't my words, this is words from ICT himself. So today I'm going to be going through one of the best and most talked about methods, strategies on ICT's channel, which is the ICT Silver Bullet. This forms about nearly every day, and it's great. You can expect like 15 pips minimum or 10 handles if you're trading indices from it. I'm going to go through what is the silver bullet, what pairs and times does it form on, how do I find and trade the silver bullet, how do I ensure a high probability trade on the silver bullet. I see a lot of videos on YouTube really overcomplicating the ICT silver bullet, so this video is going to be precise to the point while not missing out on any of the details. So let's get right into it. So if you don't know what the ICT Silver Bullet is, the ICT Silver Bullet trading model is a time-based trading model that focuses on liquidity sweeps, market structure shifts, and fair value gaps for an extremely high win rate. If you guys are unsure on those topics, I can make videos on that for you guys. Just let me know in the comments. But ICT himself said, as I said in the intro, there is no better setup than this strategy. It forms every single day, can quit your job and become profitable from this one strategy alone. So what is this amazing strategy and how do you do it? So I'm going to walk you guys through 5 steps on how to catch the silver bullet, how to trade it, how to minimize your risk, everything. So times and pairs. Firstly, what times and pairs should you trade the silver bullet on? So there is London session, NY session, and there's a PM session. However, I do not trade the PM session. From my back testing, I've realized that the PM session is not as consistent as the London and NY session. So I recommend you guys stick to these 2 sessions. So with London session, it forms 3 a.m. to 4 a.m. NYC time. I also put UK time for you guys in the bottom. For NY time, it's 10 a.m. to 11 a.m. And for pairs, Euro USD, GBP USD, and the Nasdaq. So you guys should go back test this for yourself. However, I found these are the best pairs with the highest win rate. I've seen a lot of videos on YouTube, including the SPX 500. However, from my back testing, I find that it's not as consistent, and you're not unable to catch as many handles as you are, say, on the Nasdaq. So I recommend you stick to these 3. However, you guys should do your own back testing, as I see people get different results. So let's move on to our step 1, which is all about the liquidity sweep. So we want to wait for market to take out liquidity, and I've listed quite a few key levels of liquidity here: previous day high, day low, daily high or low, Asian session high or low, London session high or low, previous week high or low, equal highs, equal lows. These are all key levels of liquidity which you want to wait for market to take out, ideally close to your time delineation. This is the New York session. This is 10 a.m. This is 11 a.m. And ideally, you would want the liquidity sweep to happen close to this time. It doesn't have to be in your zone. This zone is only here to say you can only place your trades in this time. However, that does not mean you cannot look for liquidity sweeps outside your zone, look for fair value gaps outside your zone. So moving on to step 2, market structure shift. Firstly, I'm going to show you guys what is a market structure shift. So a market structure shift is when we replace the old low, when we close below the old low, and the candle has to close below this low. So the difference between a market structure shift and a liquidity sweep is a liquidity sweep is with a wick. So the candle does not close below the low. So with a market structure shift, you want the whole body of the candle to close below the low. So that's a market structure shift for you guys. And you want to see displacement. Displacement is when market is jumping. As you can see, it's a very big body of a candle. This is displacement right here. And by the way, guys, if you take liquidity to the upside, you want to be looking for sells. If you take liquidity to the downside, you want to be looking for buys. So with that out of the way, let's move on to step 3, which is our entry. So entry is quite simple. Once you've got your displacement, you just want to mark out your fair value gap from the displacement. From the market structure shift that was created, you want to mark out your fair value gap from here. So our market structure shift was formed by this candle, so we're going to look for a fair value gap in this candle right here. So you want to enter from the 50% mark of your fair value gap. This is a trick I use to minimize my risk, to minimize my drawdown. I find it always helps. Most of the time, market will tap into your 50% region of your fair value gap. So always enter off your 50% mark of your fair value gap. Now from here it's simple. You could place your limits and simply walk away from the trade and wait for market to hit your zone, let it play out. As for TP and stop loss, for stop loss you want to place it above a swing high or swing low depending on the scenario of the market. For me, I've placed it above here. If I placed it any higher, it would be going to 15-16 pips, which would be too high for me, as we are looking to aim for a 1-to-2 risk to reward ratio or 1-to-3 or something of the sort. So for TP, you want to aim opposing liquidity levels, equal lows. I've went through it on the other slide, so if you guys just want to go back, check your key liquidity levels and see what is available for your scenario in the market. So step 4, our favorite step and the easiest step, just wait for the money to come in and watch the money come in, because this strat is insane. A very, very high win rate from my back testing. This basically works about every day, and when it does not work, if you guys make sure to partial, you will always walk away from the strategy with profits. So as with all my videos, I'm going to show you guys a real market example, because the best way to teach is to teach by example and show you real market examples. So I showed you a bearish example in the slideshow, and now I'm going to show you a bullish example on the real live market. So let's get into it. Before I show you guys an example, I just want to show you a silver bullet trade I took today, just to show you guys it does work. This is a trade I took literally a few hours ago, and we managed to hit around 15 pips. I entered off a balanced price range. As you can see, sniper entries, sniper exits. I'm going to put up a screenshot of the MT5 entry, and yeah, this is just to show that it does work and it's a great strat. Alright, we are in Euro USD on the 1 minute time frame, and to start off, I'm going to show you guys what indicators I use for the silver bullet. So if you want to go to your indicators, you want to search up sessions and choose the one by Aurochs, sessions on chart. Okay, now you want to go to settings and deselect Tokyo session, and you want to change London session 3 to 4 and 10 to 11. Ooh. Now guys, make sure your time is UTC. Everything I talk about on this channel will be UTC -4. This is NYC time, as this is what ICT teaches. So if you want to follow along, I'm going to be making a lot of ICT videos teaching you guys all the strategies. So if you want to follow along, make sure to put your time frame, your time zone onto UTC -4. So once you have the sessions, the next indicator I recommend you use is the BPR, balanced price range, trade for ops. So all balanced price range is when let me just show you guys right here. Okay, I finished my drawing now. So say you have a fair value gap right here, and you have another fair value gap right here. You see where they overlap? This is what we call a balanced price range. This right here is a balanced price range, and we can use it for confluence towards our trades. So we would label this FVG, BPR, fair value gap, balanced price range. So with that in mind, let's go back to our chart. So back on our chart, we are going to go into replay mode, and I'm going to replay the market right before it enters our zone. So I'm going to delete everything off my chart. And firstly, before market enters our zone, you want to identify the levels of liquidity. We have a zone of liquidity right here, and we have relative lows, equal lows, whatever you want to call it right here. So market takes out the equal lows before taking out the equal highs. So this is how I know we are looking for buys right now, as we've taken out sell side liquidity. Now with step 1 done, we want to move on to step 2, which is our market structure shift, which if we play the market, we very clearly get a market structure shift here, and this is a valid market structure shift, as this body of the candle closes above the previous swing high. So that's our market structure shift. Now we have gotten displacement right here, and here we go. The BPR indicator has shown me that there is a balanced price range right here. So we want to mark out our fair value gap right here. I want to enter off the 50% range. This is a valid balanced price range. As you can see, we have a fair value gap right here. We have another one right here, another one right here, and even another one right here. So they are overlapping. This makes a balanced price range. This adds confidence towards our trade. So now, if we play out the trade, we can see how it goes. Firstly, I'm going to set my order. I'm going to place my stop loss below the swing low around 5 pips. And where we... Ooh, my bad. Where are we going to target? We want to target opposing liquidity. So what do I see? I see a previous session high. You guys can go back to the slideshow. This is a key level of liquidity. So how much pips is this? We want to look for 15 minimum of forex, and bang, it's 15 on the dot. So this is our 1 to 3. Let's play out market and let's see what it does. Hits our take profit and a bit more. So that's example 1. Example number 2, I am still on Euro USD. So if you guys, let me go on a higher time frame for you guys actually. The 15-minute, you can see we have a lovely area of equal lows here, which has been taken out. Let me go back onto the 1 minute. We've taken out these equal lows, and here's our time delineation from 10 to 11. So we've got our liquidity sweep, which is our step 1, market structure shift. We have right here, we've closed above this high. So we've got our market structure shift, and we have our displacement, and we have our balanced price range. As you can see, this is the balanced price range right here. We have a fair value gap right here, and we have another one right here. So we have a balanced price range. I want to enter off 50%. This is a really, so if I measure this fair value gap, it's about 0.3 pips. Wow, not even 1 pip. So I wouldn't be too worried about marking out our 50% zone. So simply place your order, stop loss below the low, and targeting opposing liquidity, which is our equal highs right here at 20 pips. This is nearly a 1 to 3 risk to reward ratio. So again, guys, we have liquidity sweep, market structure shift with displacement, fair value gap with balanced price range. That's all you need. I see guys overcomplicating the strategy out on YouTube. It's not that hard. Now if we play our market, you can see, boom, we hit our take profit like that. So thank you guys so much for watching. If you made it to the end, I'd appreciate you guys subscribing. Thank you so much for watching. If you guys have any questions, just let me know below, and I'll see you guys next time.